It's shiny and it's precious, but is it worth owning in your investment portfolio? Hello, and thanks for checking out this week's Fastest 4 Minutes in Finance. I'm Scott Inman. Well, back in the early 2000s, the Lord of the Rings trilogy dominated the box office, making nearly $3 billion worldwide. One of the loathsome and tragic characters in that trilogy was Gollum, once a normal hobbit who was transformed into a monster by his obsession over a golden ring. He worshipped the ring, calling it "my precious." And it can feel like there is an obsession with actual gold in today's investing. In fact, gold prices are up more than 40% in 2025, on pace for its best year since 1979, according to Yahoo Finance. Gold is traditionally thought of as a safe haven, and it's often turned to when economic crisis looms. But this run in gold has gone hand in hand with stock market growth. So what's behind the golden growth, and is it time to consider it for your portfolio? Yahoo Finance reports that gold prices have been driven up by expectations of the Fed lowering interest rates and a weaker U.S. dollar. One investment strategist told Yahoo it's being driven by central banks from around the world that are buying gold to hedge their currencies versus the dollar. But before you buy gold for your portfolio, here are some things to remember. First, gold is a speculative investment. It is a precious metal, but its price is not based on earnings or growth potential, and it doesn't pay dividends or interest. Its value is based solely on what someone is willing to pay for it. That's why there are so many ads out there wanting you to buy it. If it was such a great investment, why is everybody always trying to sell it? Number two, gold can be just as volatile as the stock market and isn't always a hedge. While the stock market is historically more volatile than gold over the long term, gold often has just as strong of a price swing as the stock market in any given year. And just like now, when gold and stocks are both going up, there have been many times when both go down, making it difficult to call gold a hedge against the market. And number three, over a long period of time, the stock market wins. It has greatly outperformed gold. Since 1993, as an example, a $10,000 investment in gold would be worth about $92,000 today. A $10,000 investment in the S&P 500 index, which you can't directly invest into, would be worth nearly $300,000. There are periods of time when gold outperforms, but historically, the stock market is the better investment. Bottom line, gold may have a place in your portfolio, but your allocation to it should depend on many factors, and none of them should be fear. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.